Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. Paris Rapeseed. Since the low in mid-March, where we saw the fall ending with a hammer pattern, we've seen a V-bottom and overall prices very gradually moving higher in what I initially thought might be a possible ascending triangle pattern, which I am now increasingly veering towards what might be an ascending wedge pattern. The lower trend line for both is the same. It is the bright red mid-March today uptrend, currently at 469 even. For the ascending wedge pattern, I've chosen not to draw a new trend line, but instead I relied on two previously highlighted features. The fairly flatlining until recently gold long moving average, currently 495 3/4, or the dark blue neckline extension, currently at 494, of the April to August 2024 head and shoulders top. The last over most of mid-May, we've seen concerted attempts trying to break higher over both of these topside resistances, even managing a significant break higher over both 2 weeks ago. An attempt to do the same this week over the dark blue neckline, but halted dead by that gold long moving average above. So even now we have no closes over the gold long moving average. Now this gold long moving average and a dark blue neckline extension, plus for a while, though no longer it seems true, the declining mauve medium moving average, currently 485.5, managed to cap the market. Looking below, we had or have support at the green short medium moving average, currently at 481.25, and we could say that we have a congestion area below between the bright green neckline extension, currently at 480 3/4, and the 50% Fibonacci line of the May 23 to January 25 move of 467.25. So overall, the immediate future was supported by this congestion zone below and then capped by the gold long moving average above. One final point. 2 weeks ago, we had a weekly key reversal down. We've not seen any follow through to this, indeed the exact opposite. And though we are still within that particular week's range, I think its influence is rapidly diminishing. And I'd look to the gold long moving average above and the support zone below for near-term opportunities. Winnipeg Canola. Back in mid-May, we started to run into some serious overhead resistances, specifically some resistance I mentioned 6 weeks ago, and I quote, some generated congestion roughly between 723.70 to 735.20 plus a recent ascending lower trendline extension, end of quote. Now I also added 4 weeks ago the neckline extension of the old August to October 24 reverse head and shoulders continuation pattern. That's currently at 744.80. This one has been particularly good at capping the market, and the only reason I didn't mention it before was that I thought the 723.70 to 735.20 congestion area overhead would have been enough. In the end, we had a gapping changeover lower 4 weeks ago, leading to what can best be described as a somewhat artificial weekly key reversal down. Prices since tried to recover, but the initial rise was tempered on approach to the overhead 50% Fibonacci line of the July 23 to September 24 move at 700.5. And though back in late May prices started to fill in the changeover gap, it seems that this was then too much and we saw a sharp drop in prices back down to the previous mid-May low in the 664.10 zone, which is coincident with the November 2024 high and the interesting 38.2% Fibonacci line of the same July 23 to September 24 move that the 50% Fibonacci line above had capped prices, plus the not insignificant rising green short medium moving average, currently at 680.80. So all these halted the decline at the turn from May into June. Now, as I said last week at the end of my commentary, and I quote, so what have we growing here as a pattern? Well, I'm not too sure, but if I was to hazard a very really outside idea, then I would look at the action recently as a possible bearish cat's ears pattern, or less outrageously, maybe a double bottom. More on these should they develop, end of quote. Well, since last week, we have seen a number of interesting things. We've seen at the start of this week the 50% Fibonacci line at 700.5 try and cap prices, though, which it did successfully until yesterday, when we had a decent breakthrough on the upside, halting only just ahead of the old July 2008 high at 710.80. Today we've punched up through this, so this brings into the frame the overhead congestion at 723.80 and a dark blue neckline again. That's currently at 725.5. However, most important of all is that we have now, as mentioned earlier, a double bottom on our hands here, with a primary target X in the 717.70 area, so not too far away, and a secondary harder to reach target X1 up in the 726 even area. Bursa Malaysia crude palm oil. There are some recent and in some cases close to the market features that have helped hold up the market, but some which have now given way and others that are being tested and so far seeing good supports right now, but we'll see. To start with, I'd look to the wide congestion area now overhead between 44.08 to 45.59. This was support, but is now resistance. Next, there's the significant combination of the 38.2% Fibonacci line, the May 20 to March 23 move, and the 50% Fibonacci line, the May 23 to December 24 move, both at 42.74, being joined by the declining medium moving average, currently at 42.70, plus the nearby lesser Fibonacci line, also just below, at 42.39. On these, I said 8 weeks ago, and I quote, "It seems some significant bearish pressure is meeting some substantial bullish supports. Something has got to give, and for now it is looking like the downside might. If it does, then apart from the July 23 high at 41.89, we might not have anything of note below until the congestion starting at 40.26. Caution," and that's the end of the quote. Well, 8 weeks ago we gapped lower and dropped down through that 40.26 zone, briefly trying to become an elastic move back up, trying to fill in the gap left behind but failing to do so, making another smaller gap lower 6 weeks ago, pushing down to and through the interesting dark blue neckline extension, currently 38.80 of the small late May to April 24 reverse head and shoulders bottom. I have said 7 weeks ago about this dark blue neckline, I quote, "This is one to watch on the downside, as it is the core of a large April to September 2024 congestion zone, stretching from roughly 3750 up to 4100, end of quote. I also added 7 weeks ago, and I quote, "These actions have brought to my mind another new pattern that may be just about completing, but which can even now still be derailed. It is to look at the whole move down from the high back in early December 24 today as a really big halfway hesitation pattern. Now, to give an idea of the potential on the downside, we have a possible target X down at 3750, right on the far end of the congestion we sit within right now, end of quote. Well, 8 weeks ago we reached down and achieved target X at 3750, even overshooting it a bit. But we've had since then a reactionary move back up, such that the dark blue neckline extension is now a key support, resistance, and more likely a congestion point, all at the same time. We've since also started to try and move higher with what looks right now like a possible, if imperfect, given this week's actions, bright red ascending triangle pattern formed over May to date, and that's currently 38.86 to 39.86. It is a small pattern, and I could regard the action over yesterday and the day before as an attempted false break on the downside that so far has failed. False breaks, coming as they do so far along the triangle and so close to the tip, are not unexpected, and whilst I cannot as yet give definitive targets for either side, I can give an idea of the potentials involved. Thus, a true confirmed break higher over the bright red upper trend line will have a primary potential of 200 plus 209 ringgits, with a secondary harder to reach potential of plus 298 ringgits. Whilst a true confirmed break lower, below the bright red lower trend line, will have a primary target of minus 131 ringgits, with a secondary harder to reach potential of minus 298 ringgits. There is one other feature I would like to discuss, and this came about because I will later this month be speaking about it at a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. So it is to watch out for a key level from now until the end of this year, so it's about another 6 months, and that level is 35.99. If we push down below 35.99 before the end of the year, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, all the implications such a huge long-term pattern may bring. Please watch out for this, it is important, and I will bring you more details should we get down below there. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.